Welcome to our overview of bookkeeping and accounting. These are two essential practices for managing finances in any business. Whether you're a small business owner, a student, or just curious about this field, understanding the basics can make a huge difference. So, this is an outline of what this training is going to cover. It will introduce both terms, bookkeeping and accounting, what they mean, their key functions, and the major differences between them. So now we're going to start off first by defining both terms. Bookkeeping and accounting are often used interchangeably every day now, but the truth is that they play different roles and it's important to know these areas of differences. So let us start off first with bookkeeping. Let's explain what bookkeeping is really. Bookkeeping is a process of recording daily financial transactions. Now, what are these daily financial transactions? Let's take, for example, you're in a business or you work in a company and a customer comes to you to buy an item. That is a sales transaction. A bookkeeper takes account of this transaction and makes sure it's properly recorded down. You pay for light, you pay for advertisement, you pay for transport, you pay for delivery, you pay your staff. All these transactions are financial transactions. As long as money is involved, money is being transacted, money is moving from one hand to another, that makes it a financial transaction. And a bookkeeper is keeping an eye on these things and making a record of every money coming into the company, coming into the business, and leaving the company. That is what a bookkeeper is supposed to be doing. Now, in order for bookkeeping activities to be effective and efficient, we have to ensure that there's accuracy. And the only way you can ensure accuracy of your recordings is when you have source documents. That is to say, every bookkeeper needs to rely on source documents. Examples of such source documents are the invoices, your receipts, and your bank statements. Now, let's talk about the key tasks in bookkeeping. We've already highlighted the fact that bookkeeping involves basically recording transactions. But aside that, a bookkeeper is also someone who reconciles bank statements. A bookkeeper is someone who goes through the bank statements to ensure that every transaction in there is accurate. Where there are errors, you speak to the bank. A bookkeeper also ensures that every ledger in the company is maintained. I will discuss what a ledger is in future videos. A bookkeeper also ensures that financial transactions is recorded accurately and also timely. Now let's discuss what accounting is. Accounting, on the other hand, is a broader field. It involves interpreting, classifying, analyzing, and summarizing financial data. So, an accountant goes a step further than a bookkeeper. What an accountant does is that he uses the information provided by the bookkeeper to prepare financial statements, conduct audits, and provide financial advice to the business. Now, we've discussed the source documents for bookkeepers. Remember their invoices, their receipts, and their bank statements. Those are the first evidences of a transaction. Now, when a bookkeeper has worked on this source documents and put all the figures in the records, those records now become a source document for the accountant. So, the source document for an accountant is from a bookkeeper. An example of such source documents are journals prepared by the bookkeeper, ledgers prepared by the bookkeeper, and financial reports prepared by the bookkeeper. Now, an accountant is a more experienced bookkeeper because for you to be a good accountant, you have to be first a very efficient bookkeeper. The key functions of accounting include preparing financial statements, that is your income statement and your statement and financial position, your cash flow statement. It also involves managing budgets for the company. It involves conducting audits and also offering strategic financial advice to a company. Now, accountants use the data collected by the bookkeeper, like I earlier mentioned, to make informed decisions and ensure compliance with regulations. Now, here's a quick comparison between bookkeeping and accounting. Now, bookkeeping, like we said, is about maintaining accurate and up to date records of transactions, while accounting is basically about interpreting, analyzing these records to provide a clearer picture of the financial health for a business. Now, the areas of differences lie majorly in their scope, that is, how extensive the work is, in their function, in their complexity, and also in the mode of analyzing data. So let's run this up. We know that bookkeeping and accounting serve different functions right now, and it's clear that they are interdependent. So we know that effective bookkeeping ensures that accountants have reliable data to work with, and a robust accounting practice will help businesses make informed decisions and plans for the future. Understanding both bookkeeping and accounting can help you manage your finances more effectively. So, even if you don't intend to become a bookkeeper or an accountant and you're just running your business or managing your personal budget, if you understand what these terms are and how they relate to one another, it will help you manage your finances more effectively. So, if you found this video helpful, be sure to like, share, and subscribe.